I am investor and publisher at Digest Publishing, Nick Hodge. I am without my friend, partner, investor, and editor of Resource Stock Digest, Mr. Gerardo Del Real. He is off in Central America, getting a bit of reprieve with his wife. So you just get me today, and I was struggling to decide what to talk about. I took to the Twitterverse to ask, and I got a couple of inputs there, which I'll get to at the end. But I thought, since I've been recently at a couple of conferences, that I would give you the gist of a talk I've been giving, which centers around where we've gone over the past year or so, and how I've framed that to my premium and paying readers and subscribers. And then I looked at where we're at in the commodity cycle, and of course where I think we're going. So you guys know I like The Fourth Turning, and there's a new iteration of that book out this summer called The Fourth Turning is Here, and the author, Neil Howe, is talking about how all too often in the modern West, people fear that, any outcome not subject to their immediate control must mean that we're heading to a catastrophe, and we see this all the time. And before I get into sort of how that resonates with investing, let me first define the concept of time, or the various concepts of time. Back in the day, hunter-gathering, before we harnessed agriculture, and certainly before we industrialized, things were cyclical, right? We depended on the seasons to plant and to sow and reap, etc. And time was viewed as cyclical, right? We used the stars and things to identify where we were in the cycle, the seasonal cycle, and also, to navigate. And then once the advent of various religions came along, they sort of, morphed us into linear time, right? The religion has its starting time, Genesis, or whatever that is, and some endpoints, right? In Christianity, it's the apocalypse, so we're marching linearly forward. And what people are realizing, certainly what Neil Howe argues, is that humans are cyclical. Cyclicality is a big part of what we do in our lives, and certainly in the seasons, celestially, but also in the markets. And so you got to take that into account when investing and making investment decisions, that, just because there's some uncertainty lying ahead, it doesn't mean that the Grim Reaper is coming, or that there's going to be an Armageddon, or that you're going to have to shelter in place and eat bugs, etc. And so, speaking of eating bugs, I was talking over the past year about, all these memes and all these tropes that are out there, right? How dumb the Fed is, and how huge the debt is, and how much the interest payments are, and how there's going to be a global reset, and central bank digital currencies. And like I just said, they're going to make us eat bugs. And this morphed into a market narrative a couple of years ago that basically said silver was going to go to the moon, and, started using this line, this trope. How can this end well, right? Well, I don't know how it can end well, but I know that when they started telling us that silver was going to go to the moon, I was telling you that it wasn't, and that there was going to be no pivot, and that the dollar was going to remain strong. And you've probably heard me talk about that week in and week out here for the past 18 months. So there's the date that the To the Moon folks joined Twitter, and is a chart of silver and the dollar sits then. And I'm just wondering still, what am I missing if silver is supposed to go to the moon and the dollar is supposed to crash and be worthless? I've been talking about this for over a year now, so this is a bit of summary. And I've concluded in talks I gave last year in 2022 that there was going to be no pivot, that the rate and economic cycle was going to take some more time to play out, perhaps another year, to the end of this year or early in 2024. And that's exactly what happened. And that the last price is the only price that matters. So I get that there's structural problems. I get that deficits matter eventually. But and the perfect example is like the copper market. I get that there's a structural copper deficit. I get that, there's going to be runaway demand as we decarbonize and electrify, build out the grid. And at the same time, I've been saying all year that copper was going to go closer to $3.50 than $4, because the last price is the only price that matters when you're, heading into a recession, and then copper is pricing that in for the immediate term cycle, as opposed to, the super cycle that everyone is expecting, and that is going to come, just not yet, because the last price is the only price that matters. And so last year I was ending talks with this chart of the CRB commodity index, showing a nice, cyclicality there, right? A super cycle beginning in the early 1990s, running until the global financial crisis of 2008, and then selling all the way down to its baseline where it started that super cycle in 2020, and a new super cycle kicking off. But the issue is, this is where we are now, because you had a nice pullback in the 1990s as we headed into the dot-com crash that, brought the super cycle, the Nash super cycle at the time, all the way back to where it started in 1994. And then it took off for the next 10 years like a bat out of hell. I think you're going to get a pullback like this, which is what I've been saying, due to a recession that's going to materialize here. And you're going to get a pullback in commodity prices that you should be taking advantage of, because then they're going to get their next leg up in a super cycle that we're already in. And now I'm making jokes, because if only there were a sign for that. And so here's an updated chart. It's a bit more, it's more recent, obviously, and the lines are a bit more congruent here. So you'll see that in 2020, the commodity prices got ahead of themselves, essentially. You'll remember how fast, lumber prices and aluminum prices and things were going up, and we were at 9% inflation last June, and then commodity prices were going up significantly. Well, they got ahead of themselves, and now they're pulling back in 2023 as we head into 24, similar to that pullback you got in 1998. And I think we're, heading into a place where growth is relatively subdued. That's the axis here. And inflation is stuck high. So this is a quad map from Hedgeye. They break things down into 4 quads. Growth accelerating as inflation decelerates, growth accelerating as inflation accelerates. Quad 2, quad 3 is growth slowing as inflation decelerates. Quad 4, growth slowing as inflation decelerates, and quad 3, growth slowing as inflation accelerates. And you can see on this line here, hopefully you can see my mouse, that growth, U.S. growth, is not going to be positive for the next couple of quarters. And inflation is going to be stuck sort of sticky high. So we're in this place in between slowing growth and inflation decelerating, and slowing growth and inflation accelerating. And it's perfect for actually this week, because, there was the Walmart CEO out this week saying, or last week by the time you see this, that deflation could happen to food prices this holiday season. And then Kathy Wood was out saying deflation is a greater risk right now than inflation. And it's just because you've had this pullback in inflation, but still at 3.2%, it's 60% higher than the Fed's 2% inflation target. So, yeah, prices have come down, but they're still inflating at a rate of 3.2%. So, I guess no, prices haven't come down. They're just inflating less fast, right? But they're still inflating it at 3.2%. So anyway, the point of this slide is we're either in stagflation or, outright recessionary environment here for the next 3 quarters, it looks like. And what has that meant for resource stocks, particularly the TSXV? What are they pricing in? Well, they're pricing in the recessionary slowdown that I see coming, and that I still believe is going to materialize. And you'll see here that the TSX Venture Exchange is in worse shape than it was in 2008, according to this chart, which shows the value of the entire exchange. You're approaching the COVID 2020 crash lows. So resource stock sentiment has been out the window, and price has been out the window as well. And so what's the outlook? It's 2 to 3 quarters of continued slow growth and above target inflation. So, the above target inflation is important because, Jerome continues to say that 2% is his target, and he leaves the door open to certainly leaving rates higher for longer, but also to a potential additional increase in rates, right? He's committed to getting this inflation rate down to 2%. So there's not going to be a pivot, at least from where I sit, in the coming quarters. It's ultimately going to be the labor market that forces the Fed's hand. I don't believe that happens until the second half of 2024. You had a soft jobs report that we talked about on this podcast recently in October. And that's sort of what has led to this recent, talking of the Fed's going to cut, and the stock market to reverse the sell-off that it was having, and in October put in one of its best weeks in the past several months, because there was a frankly shitty jobs report that came out, and investors took that as a catalyst, or at least took it to mean that the Fed was going to cut rates. So I don't believe that's the case. As I talked about on this podcast a couple of weeks ago, that was a one-off event. The labor market is still going to hang in there, and it's likely not going to break down until the recession comes, and small business profits contract. So that's not until last year. For me, that's what will make the Fed, if it hasn't reached its 2% target yet, which I don't believe it's going to do, that's what will make the Fed abandon is to save the job market. And so I've been in a lot of cash, both on the macro safe side of things, long-term capital, safe capital, and on the speculative, more risky side of things. I have a lot of cash. I have a fair amount of gold, not bullion, trust gold that I hold in a stock portfolio. And I'm in really no hurry to deploy that cash. I think you're going to get a nice pullback in commodity and stock prices here over the coming months, and particularly in the resource market. I think you should use that time to hunt for trophies. Companies have some credentials here. What is a trophy? Companies that can easily raise cash, or that already have it. Companies that don't have cash or that can't raise it, their stocks are being sold down precipitously right now. I just showed you a chart of the TSXV, the lowest it's been except for 2020 crash, COVID crash since 2005. And even companies with good deposits, with, outline deposits in the ground, even with, PEAs, preliminary economic assessments, or pre-feasibility studies in some cases, even with robust economics, have been sold down if their treasuries are low, because the cost of capital is high right now. And I just said I was raising a lot of cash. I have not been writing a lot of checks. I'm using this time to go to conferences, to meet with companies, and then to make a very short list of companies where I'll be deploying that cash. Companies that I view as trophies have catalyst over the next 12 months. They have serially successful leadership. They're in a safe jurisdiction, and they're not dependent on commodity price. I see a lot of companies out there, and the bulk of their pitch is, our stock or our company or our asset or a project or whatever will be really great if copper could just get to X, $4.25 or $5. And it's like, well, that's great, but I'd rather look for a project that's good at $3.50 copper, or the price that we currently have. So you don't have to entertain those optionality plays, or we need a higher commodity price plays. You need to just be looking at the folks, like I say, that meet all these criterias, and whose projects are contingent upon the underlying price of the commodity that they're exploring for developing. Skip over that because that was from a conference. We won't give you all those free picks. You can go back and pause it if you want to do diligence on some of those names. And then I gave a parked headline warning, right? This goes back to that first slide from the fourth turning about how if something is out of your control, you immediately think that it's, negative, or going to be a crash, or must be Armageddon, right? Thinking about linear time. And so this is just a call out I've been making recently about people who prey on that, right? And Zero Hedge is the perfect example. This was just a story I pulled from back in June, talking about how there was a coming monetary shock to the world. It's going to be the biggest thing. What does it say here? The biggest upheaval in international finance since 1971, right? It's the depegging of gold and the dollar. And it's taking direct aim at the dollar. And it's going to happen on August 22nd, according to Zero Hedge. Here's a chart of the dollar since August 22nd, when that event was supposed to happen. And so, avoid these clickbaity headlines. Just because there's, negative sentiment out there, or, we're heading into recession, doesn't mean that, we're going to be eating bugs next week and they're going to issue a CBDC and the dollar's going to crash. Like, deal with what's in front of you. Realize that things are cyclical. Realize it's never as bad as it seems. And, always realize that just because you can't control it or you don't understand it, that doesn't mean that it's the end of the world. And so, I'll stop there with the slides, and I'll talk just for a second about a couple of questions that came in via Twitter. So one was from Peter Spina, who is with GoldSeek. He's a colleague of mine I see around from time to time at conferences, and he was basically asking about financing sentiment in the gold space, if I thought, companies would be able to raise money next year. I think quality companies can always raise money, right? That's what I was talking about in the slide a couple of bullets ago, right? Look for companies that either have cash or the ability to raise it. So, and I said I haven't written a lot of checks recently, but I did write one in the past. Well, I've written two in the past 3 months. One to a lithium deal and one to a gold deal. So, Revival Gold, which has over 4 million ounces in the ground, is at the PFS stage, at least for the heap leach portion of the project. The Bear Track Arnett project that they have in Idaho, which is the largest past producing mine, has infrastructure on site, has the ADR plant, has leach ponds, and some remediated pads. And there's some gold still in some of those pads that could be leached. And yet the stock has been sold down because it had to raise money. It's raising money now. I wrote a check, and I think they'll be able to raise that money. Second is I believe gold goes higher. So what you've had is a crisis of confidence, right? Certainly in those of us who participate in the precious metals markets, and also definitely in the generalist investors who haven't come into the sector yet. And why is that? Well, despite gold's, relative strength being near $2,000, despite the strong dollar, which I was just talking about, despite interest rates having gone up significantly over the past 2 years. Gold has held its own, but it hasn't broken through $2,000, right? So it's knocked on the door a couple of times. What I think happens is you do get that, gold metal price bull market breaking through at $2,000 an ounce in 2024. And I think that's a big psychological catalyst, not just for those of us, again, who are interested in the market and participate in it routinely, but for those watching from the outside. And it'll be also a catalyst for people to write checks into gold deals. So, looking into my crystal ball, I do think 2024 will be an easier environment for capital raising as opposed to this year, and likely a result of higher gold prices. Another question that came in was there was a couple of tickers people asked me about, and then someone was asking if there are any commodities I'm looking at that are out of favor. It's an interesting question. I don't necessarily go looking for commodities that are out of favor, but I look at ones that have good supply demand fundamentals, and also where I can find good projects. So I'll tie together two of the comments that came in, and then I'll wrap this up because it's late. You might be able to see that it's dark in here. I got my little ring light, and stay late at the office. It's like 6:30 p.m. and it gets pretty dark early in the Pacific Northwest this time of year. So anyway, trying to get home to my kids in a second. But the question was about the commodities that I'm looking at, perhaps undervalued or hated or beaten down or whatever. And then there's a question about Bravo mining. So I'll tie it together and say that not a lot of people talk about platinum PGMs. Certainly not, when you find them in polymetallic deposits that have gold and nickel and maybe some copper as well. And so Bravo Mining is a company that has a deposit like that. It's a company we financed at 50 cents US, and that ran into, over $3. I think $4 Canadian after it listed. Let me get it right. To $5.24 a couple of months ago, and has since sold off to $2.80. We're still up significantly from the 50 cents we financed it at. It's got a very robust PGM deposit in Brazil that does have semi-massive nickel sulfide mineralization. It has rhodium, has gold, and has a little bit of copper as well. They're on a very robust phase 1 and phase 2 drill program with multiple rigs turning. Has several million ounce resource already, and has only been drilled out to like 150 meters depth, and that was done by Vale historically. So the company is working to update Vale's assays, which didn't include nickel and rhodium in some cases, and are finding higher values as they reassay some of those old cores. And they're also drilling deeper beneath 150 meters down to 300 meters, and they've already shown that the mineralization continues to 300 meters. So just for simple math, likely twice as big as it's already known to be. And there's a very long multi-kilometer strike length that they still have to explore. So this thing could get much bigger. They had some board troubles. Stock has pulled back, like, not immune to global macro headwinds, and the TSXV that I said was at multi-year lows. So there's that going on. And they had a board shakeup. And then they have just paused a little bit of promotional activities. They were doing a good job of telling their story and getting out there and going to conferences. And amid the board shakeup, that has waned a little bit. But the company is structurally fine, is well financed. It continues to drill, and we'll get back to putting out news here in short order. So just answering a couple of questions there. One, PGM's worth a look, more than palladium, in my opinion. And just a little update there on Bravo, which I haven't sold a share of, continue to own, and continue to recommend it in my speculative newsletter. So I'm not sure how long I've been going for, but it's obviously harder here without my partner, who some people say does most of the talking, although I feel like I've been holding my own in the past couple of episodes. Please do, if you like these episodes, subscribe to the Bizarro World channel. Like this video, comment, and then use that comment section to ask us questions. And if you're interested in the content that we put out, do check out Daily Profit Cycle, which has free editorials every day about the stock market, and check out Resource Stock Digest as a sponsorship site where companies use it as a platform to tell their stories, and we sort of help guide them as they do that. Certainly Gerardo does as he interviews them. Not just softball questions either. So some good resources that we put out there. And I'd be remiss if I didn't encourage you to sign up for the current $1 million crypto club that we're offering, which is a free resource, especially as Bitcoin goes up to $35,000 or $37,000. So we'll put a link in the description on YouTube for that, and also in the article on Daily Profit Cycle when we publish it. And I believe with that, I'm going to wrap it up. Let me just make sure I know what episode. It's the 245th episode of Investing in Bizarro World. We'll see you back here next week, along with Gerardo. I'm Nick Hodge, signing off for now. See ya.
Hey there, you independent-minded investor. If you like this video, make sure to tell us so by clicking the like button below. Subscribe to our channel so you never miss another one. And share it with everyone you know on social media. You can also click the link in the description below to check out more information-packed videos just like this one. Thanks for watching.